Welcome back. We have plenty of stocks to talk about and a lot of large caps that came out with their numbers. Kotak Mahindra Bank was actually a healthy quarter. Abhishek is here to give us the lowdown. Abhishek, good morning.
Good morning, Sonia. So it was a strong quarter for Kotak Mahindra Bank, especially on deposit growth. Deposit growth YOY has come in at 22 quarter high at about 23.65% and a growth of 9.9% sequentially, which is perhaps one of the highest that you are seeing in last 34 quarters. Advances growth have remained healthy at 17.5% YOY, perhaps a 4-quarter high and about 4.5% sequentially. There are few one-offs in their Q4 results. AIF provision has been released of about 157 crore. They have written off 1,455 crore of unsecured retail portfolio, and there is a favorable tax credit of rupees 200 crore. So asset quality has improved on account of the fact that there are so much write-off that they have taken in the retail unsecured portfolio. So gross NPA ratio at 1.39% is perhaps one of the lowest that you are seeing in last 9-10 years or even more. Net interest margin was expected to decline on a sequential basis, but it has improved by 6 basis point on a sequential basis. There is one-off in that also, the tax reversal. ROA, including all the one-offs that you have, has hit an all-time high in terms of quarterly ROA for them at about 2.97%. So PNL, both the NI and PAT is a beat on our post. Strong performance from Kotak Mahindra Bank, especially on deposit front. If you take a comparison to other peers also, it's much better off.
Okay, thanks a lot for that, Abhishek. That could be the stock of the day. But Mangalam joins us to tell us about the other nifty stock we're tracking. Titan, how are the numbers, Mangalam?
Well, for Titan, it was an operational miss this time around. For the revenues, they were in line. But then again, the street was prepared for the revenue numbers by the company's fourth quarter update itself. What was a miss was the EBITDA. That came in at a little over 1,100 crores. The street was working with a number of 1,250 crores. Margins a little under 10%. Again, the street was working with a number little over 11%. And as a result of which, the net profit came in at 786 crores. The street was working with 850 crores itself. Why was the margin below expectations? Because jewelry business, there the margins compressed by about 100 basis points year on year, whichever way you look at it. And even watches, the margins compressed by around 300 basis points. In terms of other internals, the studded ratio too was unchanged at around 33%. The market share at close to 7%. And there was a little over 40% sales coming in from their gold exchange program at a time when gold prices are high. Management commentary was slightly tepid. They said that, gross margin expansion in the first quarter is likely to be a little modest. Competitive intensity is increasing and they expect that to continue. In fact, they haven't increased their jewelry margin guidance for this year. They maintained it at 12 to 13% itself. And there is pricing pressure in the watch industry as well. So maybe see some red on Titan, especially at a time when others like Kalyan and Senco are doing a lot better on a smaller base.
All right, Mangalam, thanks very much. And you'll be sort of hearing from the Titan management. The CFO, Ashok Sonthalia, will be with us at 9:40 this morning to talk about the earnings in some detail. But Mangalam, back to you. Britannia?
Well, Britannia, reported a weakish set of numbers, but that is something that the street was anticipating already. That's largely because the consumption scenario has been quite tepid. So year on year, the revenue growth for the company has been 1.1%. The EBITDA has actually declined by about 2%. And the net profit declined by about 4% as well. And that's actually exactly what the street was anticipating. 4,070 crores on the top line. We were working with a number of 4,085 crores. EBITDA a little over 785 crores. We were working with a number of 785 crores itself. And the net profit too, in line with expectations. The only small few silver linings that we had, the volume growth came in at 6%. This is at the higher end of street expectations of 4 to 6%. And the company gained its market share as the year progressed. And they've seen double-digit growth in both modern trade and e-commerce. At the same time, they've increased their rural distribution and total touch points. So if the consumer sentiments, or rather when the consumer sentiment improves, Britannia is well placed. So maybe see a mild green in Britannia because the weakness was expected already.
Okay, thanks a lot for that. Well, let's find out how M&M Financial's numbers look this time. Abhishek is here to give us the lowdown. Abhishek, go ahead.
Well, Sonia, they had mentioned that they have seen a fraud in one of their branches in Northeast, due to which the results were postponed. And this has led to a one-time provision of about 135.9 crore that they have made in their Q4 FY24 numbers. Disbursements are up 11% YOY and a decline of 0.9% sequentially. The loan book growth has been pretty good at 24% YOY and about 5.7% sequentially. Their asset quality has seen a sharp improvement. Gross NPA ratio ratio is down to 3.4% versus 3.97% in the previous quarter. Even the spreads have actually improved on a sequential basis by 30 basis points. So spreads are at 7.1% when compared to 6.8% in the previous quarter. P&L momentum has been strong. NII growth is at 15.5% YOY and about 7.9% sequentially. Now, this one-time provision has had an impact on the profitability. So profits are down 9.5% YOY, but they have grown by 12% sequentially. Back to you.
Okay, thanks for that, Abhishek. Well, Mangalam, come back to you. Avenue Supermarts, never been a cheap stock, but the numbers look good.
Numbers look good. In fact, for Avenue Supermarts, in fact, the street was happy with the update itself. They were looking for three things in the numbers this time around, above and beyond the update that came by. And all those three parameters, the company did well. What were the three key positives? The gross margins improved by about 50 basis points year on year. After a long time, the company's uptick coming in from general merchandise and apparel, which are higher margin businesses, is something that the street likes. And the e-com business as well, DMart Ready, showed a revenue growth of 30% and turned EBITDA positive itself. So on a consolidated basis, DMart's revenue this time around grew by 20%, a little over 12,700 crores. EBITDA grew 23%, which implied there was margin expansion by about 10-12 basis points. And we have the net profit growing by around 22.5% as well. DMart Ready, which is basically the e-commerce business, derived numbers told you that revenues grew by 30%. And at the same time, the company reported an EBITDA of 3.4 crores versus a loss of about 11 crores itself. The same-store sales growth for the company for FY24 grew by about 10%, and e-com operations have been expanded. They've opened in Gurgaon as well. Most importantly, the sales per square feet for the first time for DMart has crossed pre-pandemic levels at around 32,941 rupees per square feet. So that's a positive too. Expect the uptick on DMart to continue.
All right, Mangalam, thanks very much for that. So lots of numbers to track there in that consumer space. But Tata Technologies is the next one with numbers. Rima has got details here. Rima, morning.
Hi, good morning. So Tata Tech has reported a subdued set of numbers, slightly lower than street expectation, a top-line growth of 0.3% in constant currency terms. The reason is that one of their large clients, a Vietnamese-based company called VinFast, it's an EV maker, and there the company has been ramping down. Their project came to an end and it's been ramping down. That impacted the performance in Q4, and the company said that this expected ramp down will continue even in Q1. They'd signed a large deal with BMW, but that scales up only in the second half of the year. Margins too at 18.4%. It's higher on a year-on-year basis, flat on a quarter-on-quarter basis, and lower compared to what Ambit was anticipating. And margins too, on the back of a lower, lower other income, higher taxation, has reported profits for the company have come down by 27%. So it's a subdued set of numbers from Tata Tech this time.
Okay, let's find out how the paint business has done for Kansai Nerolac particularly. Mangalam is here to tell us more about that. Mangalam, over to you.
Well, the segment that we all track, which is the decorative segment, has done extremely well for Kansai Nerolac. The margins, they continue to improve as well. So on a reported basis, the revenues have grown just about 2%, but the EBITDA has grown 6.5%, and that's resulted in a near 19% growth in the profitability. Why is it that the revenue grew by just 2%? Because one, the companies have been taking price cuts. Secondly, Kansai gets a large share of revenues coming in from industrial business as well, where they said that there was demand which moderated over the previous quarter. For decorative business, they recorded double-digit volume growth, and that's a positive. And they say that forecasts of a good monsoon should augur well for the paint industry as well. Additionally, they've announced capex for some of their, key raw materials or key inputs. That's total resins. They've increased their capacity, nearly doubled their capacity. So that should be a positive as well. In the paint space, this has valuation comfort. So see some green on Kansai Nerolac.
Got it. Thanks, Mangalam, for that. Well, let's wind this down. Vamakshi is joining us to fill us in with some other results. Vamakshi, morning.
Well, good morning, Nigel. Let me first start off with CDSL. Good set of numbers have come in from the company. Revenue saw an uptick of almost 12.1% sequentially, and this growth was largely being led by the depository revenue as well as data entry and storage. Operating expenses also came in nearly 11.9% higher. Resultantly, EBITDA margin was flat sequentially at 61.4%. Net profit came in higher at 20.2% sequentially. The demat account addition in the fourth quarter was also quite healthy. The demat accounts stand at 115.6 million and they've added nearly 10.9 million demat accounts. So this in turn bodes well for the company. Birla Corp is the other counter that I'm tracking, and that is because the company company reported good set of numbers. Revenue saw an uptick of almost 8% on a year-on-year basis. The power and fuel expenses, however, were lower by almost 15%. Volumes were up 9%, and EBITDA per ton actually improved for the company to 964 per ton as compared to 615 per ton seen in the same quarter last year. Net profit resultantly has seen a huge uptick of almost 128% on a year-on-year basis. So good set of numbers, but apart from that, the company has also announced an expansion plan. They've approved an investment of almost 425 crores to augment the capacity of its Kudanga unit by almost 1.4 million tons within the next 2 years. Lastly, we will be keeping an eye out on MRPL. Good set of numbers here as well. Revenue saw an uptick of almost 3% sequentially. EBITDA was up almost 97% on account of better operational performance. Operating margins have actually improved to 9.2%. The net profit resultantly came in nearly 194% higher on a quarter-on-quarter basis. The company's reported GRM also saw a huge improvement to almost $11.4 per barrel. So overall, good set of numbers for MRPL as well.
Okay, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. We're looking at Kotak Mahindra Bank, Britannia, M&M, Financial, Avenue Supermarts, Kansai Nerolac, CDSL, Birla Corp and MRPL. While stocks with negative news flow, Titan and Tata Tech. Let's take a quick break. On the other side, market expert Prakash Diwan will be joining in for some fundamental stock analysis. Stay tuned.